Open a Demat account in 5 minutes. Zero brokerage trading. Invest anytime from your phone. Stock brokerage apps promise that investing has never been easier, and millions of people are using them. But this raises an interesting question. If trading is almost free, how are brokerage apps making thousands of crores every year? Behind the simple interface of these apps lies a powerful financial engine built on trading activity, interest income, financial products, and data-driven ecosystems. In this video, we'll break down the real business model of stock brokerage apps. So we will going to analyze their revenue streams, cost structures, hidden charges investors should know, and why this industry has become one of the fastest growing financial sectors. Over the past few years, India has experienced a massive investing boom. Millions of first-time investors enter the stock market through mobile apps. Demat accounts grew from around 4 crore in 2020 to more than 50 crore in recent years. Several factors fuel this growth. First, digital KYC. Opening an account now takes just a few minutes. Second, smartphone penetration. Mobile apps made trading accessible to almost everyone. Third, UPI and digital payments. Funding trading accounts became extremely easy. And fourth, pandemic era investing. During lockdown, many people began exploring the stock market. For few users, these apps offered convenience, but for brokerage companies, this was something even bigger, a massive financial opportunity. The most obvious source of income is brokerage fees. Whenever someone buys or sells a stock, the brokerage charges a small fee. Many apps advertise zero brokerage investing, but that usually applies only to delivery trades. For other segments like intraday trading, futures and options, commodities, brokerage charges still apply, and this is where the real money is generated. India's derivatives market has extremely high trading volumes. Even if a brokerage charges only a small fee per order, millions of trades per day can generate huge revenue. Small fees multiplied by massive trading activity creates a powerful revenue engine. That many beginners focus only on brokerage, but trading involves several other charges as well. For example, exchange transaction charges, SEBI regulator fees, GST, stamp duty, clearing charges. Individually, these charges are small, but frequent trading can increase the overall cost significantly. Stock brokerage apps are not scams, they provide important infrastructures for investors. But understanding the full cost structure helps investors make better decisions. One of the less visible but powerful revenue sources is interest income. Many investors keep money in their trading accounts waiting for opportunities. This money may remain unused for days or weeks. When funds remain idle, brokers can temporarily park them in safe financial instruments such as treasury bills, overnight funds, liquid mutual funds. Even a small interest rate applied to large pools of money can generate substantial income. Since brokerage platforms manage thousands of crores in client funds, interest earnings can become a major revenue stream. Another major business model is margin trading. Margin trading allows investors to borrow money from the broker to take larger positions. For example, if an investor has 1 lakh, margin trading may allow them to trade positions worth 3 to 5 lakhs. The broker earns interest on the borrowed amount. Margin trading interest rates can range between 10% to 18% annually. This makes margin lending one of the highest margin businesses for brokerage firms. However, leverage also increases risk. If market move sharply against traders, brokers must manage the risk carefully. Modern brokerage apps are evolving beyond trading platforms. They are becoming financial marketplaces. Users can invest in mutual funds, IPOs, bonds, government securities. When investors use these services, the platform may earn distribution commissions or service fees. Asset management companies often pay distributors for bringing investors to their products. This creates a long term revenue stream for brokerage platforms. The more assets users hold on the platform, the more revenue the company can generate over time. Serious traders often need more advanced tools. Many brokerage platforms offer premium services such as advanced chatting tools, trading analysis, algorithmic trading tools, portfolio tracking systems. These tools are often offered through subscription models, while basic trading remains low cost. Professional traders may pay monthly fees for deeper analysis and better trading capabilities. This creates recurring revenue for brokerage firms. Running a brokerage platform also involves significant costs. The biggest expenses include technology infrastructure. Trading systems must operate with extremely high speed and reliability. Second, regulatory compliance. Financial companies must follow strict rules set by regulators. Third, customer acquisition. Many brokerage platforms spend heavily on marketing campaigns, referral programs, and partnerships. However, this industry has an important advantage called operating leverage. Once the technology platform is built, adding more users do not increase costs at the same rate. This allows successful brokerage firms to achieve very high profit margins. Despite strong growth, the brokerage industry also faces risks. First, regulatory changes. If regulators modify rules related to derivatives trading or brokerage fees, revenues can be affected. Second, market cycles. When market becomes inactive or volatile, trading activity may decline. Since many brokers depend heavily on trading volumes, their revenues can fluctuate with market sentiment. And final conclusion of this video is stock brokerage apps appear simple on the surface, but behind the interface is a sophisticated financial ecosystem. Their business models combine brokerage fees, interest income, margin lending, financial product distribution, premium services. These platforms are becoming a crucial part of modern financial infrastructure. And as more people participate in capital markets, brokerage apps will continue to grow. But for investors, the key lesson is simple: understand the system before using it. But when you place a trade, you may be investing in the market, but the platform itself is running a highly profitable financial business.